Okay, so as I was explaining, uh, that this fear index is a VIX index, and as the index is falling, generally the equity market rises, and if the equity market is falling, then this particular index would begin to rise. So for the time being, it is continuing to work its way down, making lower low and lower highs. So we may continue to make another low around 11.78, for example, or maybe even lower. But whilst this one continues down, there is expectancy that the equity market will continue to move higher. So with that said, we were going to look at the our usual charts, which is the equity market. And again, really speaking, in the last few days, we've not had any real great deal of movement in the equity index. There seem to be one day up and one day down, but broadly speaking, still horizontal. Um, and so, whilst we don't get a correction, we don't know where to put this brown line here, which I've temporarily just placed it there, but there's really no reason to place it there other than simply this is what I'm thinking might happen. We do have this other brown line rising from the bottom, and you can see where that comes from, connecting this high and this high here. So we've got like a resistance line previously, which now we've broken above, could possibly act as a potential support. And other than that, we're expecting prices to basically continue drifting up. So there is no immediate indication that we would get a real sell-off in the market. But when we get to an area, something like this one here, like 14,100 or 14,200, we might get a pullback with a new high pending following that. So equity market generally sideways to upward bias. We look at the oil index, then the oil so far is progressing back toward the upside, having retraced this year. So I think that we can label this in a couple of ways. And yesterday I explained that I've labeled the first one up, and I don't know whether this is correct or not, but simply to work with something. So it looks like this one could be, if it is wave 1, wave 2, and then this narrow trend channel probably wave 3. So we retrace into wave 4, and we are making a wave 5 up. We'll get a clarity about this particular wave until a bit later on, when we get a new high and some kind of a retracement. Then we might be able to take another view. But for the time being, it looks like we're expecting another push higher on the oil. And then on the RSI, on this daily chart, you can see that with the wave 3 high, RSI had only a minor divergence. But what I am now expecting is, with the oil prices heading higher, is for the RSI to continue work its way up, but it won't be able to keep up with the rest of the price, as it were. And so what I'm expecting now is potentially for this divergence to develop on the second degree here, and that would then coincide with the higher prices probably taking out this high we had back in September last year at around about 100 or just marginally above 100, and then we will get a bit more deeper retracement, and that retracement would be possibly some kind of a Fibonacci retracement of the entire leg up. So we may then drop back to somewhere in the region of 92, 93, 92 area before continuing higher. So oil is continuing to support our conclusion that the equity market is still looking sideways to upward bias. So that, with that picture, we could then expect the dollar index to remain sideways also, to possibly downside bias. So if we look at the dollar index, okay, so this is the dollar index, and you'll know that we've got two views. One of them is that we are playing in a triangle, and it's possible that the triangle may well be complete, i.e. we've got wave A, B, C, D and E, where we had a recent top, that could be the end of the triangle, and we'll be making our way down, like wave 1, wave 2, wave 3, like that, basically to form this kind of a triangle pattern. If, however, this is not to be the triangle, then the other count which I suggested is that we would see this one went up there as a ABC up, then we had ABC down as a wave B, and we are possibly in some kind of flat correction. Okay, so what that means is this ABC zigzag could be a 1 cycle degree wave A, ABC back up as a B, ABC back down as a C. Okay, so that would conclude wave A, B, and C to the upside. So we would have from here first leg down, retracement A, and then coming back again the B, and then we would get another C. So what that will be doing is this wave down will be correcting that to the upside, and in doing that we would have A, B, and C. And that C, if this is going to be a flat, then we had a zigzag in A, zigzag in B, then the wave C can have 5 wave up, and in which case it can get back to the level round about 81 say, or maybe even 81, retesting this high, 81.50. So those are the two possibilities, out of which currently I'm still favoring the triangle breakout to the downside, but we will not know until the price is actually out of the triangle, because within that it can continue to stagnate and make some complex correction. Now if this is going to be a flat correction, then as I say, we would have this came down as, say, potentially wave A, B, and C, and then we will go back up on this one here, 5 wave. So if it's a 5 wave, we would get wave 1, wave 2, possibly wave 3, in which case we get A, B, C back up, back down here as a wave 4, and then we'll make another leg up for a wave 5. Now for that to happen, we could not expect dollar index to fall below 79.80. So if it falls below, which is the high here, if it falls below 79.80, then this is no longer going to be flat correction, i.e. it is no longer going to make 5 wave to the upside. So we were expecting like 5 waves, so 1, 2, 3, 4, and 5. We will no longer be able to expect that. Okay, so it really depends on what the dollar index does between now and as it, whether it holds above the 79.80 and then makes up. If it was to do that, then what we have here is possibly a wave, small degree wave A, then we'll get ABC back up as a small degree wave B, and then another little leg lower, but it has to remain above this high. So it's got to remain above that high. Okay, now if it remains above that high, then it's possible that it can then make the final leg up we are looking for. Final leg up like that we are looking for, before we have a correction to the downside. Okay, now if it doesn't do that, then I think we've got this 1, 2, 3, 4, and 5. So 1, 2, 3, A, B, and C here for 4, and then this little 5. So that completes a 1-5 wave move to the downside. We are expecting A, B, and C to the upside, and as you can see here, we may have wave A in place. So in which case we are looking for small little retracement to the downside, and then another leg up. So that would complete A, B, and C, and then we get another leg down before going up. So we just need to observe what the dollar index will do over the next day or so in this current area. If it falls below 79.80, then we've got something else going, Either we have this as a wave 1, this as wave 2, so wave 1, wave 2, and we'll be coming down strongly into wave 3. Okay, then we'll get very directional move to the downside. If it doesn't do that, and if it comes down and oscillates in here, then maybe we will have some more complex pattern within a pattern, so larger triangle, and maybe we would have some more complex pattern before eventually breaking to the downside. So at the moment, dollar index is not going to give us any real secret away, as it remains pretty much within a larger congestion pattern. But the fact that the VIX index is still very low and equity is still possibly holding up suggests that we will trade sideways to possibly downside. That's what the dollar index is likely to do if the equity index and VIX index does what we just described. Okay. Now we were going to look at the yen pairs. So let's do that, and we won't look at all the yen pairs because pretty much most of the yen pairs will be doing exactly the same. So to save time, we will only look at a couple of yen pairs. Okay, so this one, first chart we're going to look at is a US dollar yen. Now there are two charts. Is there? Okay, let's just look at that. So this US dollar yen. Now the US dollar yen, and in fact most of the yen pairs are very, very mature in their current uptrend here, and you can see this very closely defined narrow trend channel to the upside has contained the price action of the rise since the low we had here back in November, back end of November or middle of November 2012, and we've continued to work our way up. And it would appear that if we look at it from there, we can label this one as a wave 1 in parentheses, wave 2 in parentheses, and then all of this is probably part of wave 3 in parentheses because it's not broken out of the triangle. So in fact what I should do is I should move some of these numbers, and I'll explain in a second. So what we've got is this as the wave 3, wave 1 in parentheses, wave 2 in parentheses, wave 3 in parentheses, and within that we've got 1, 2, and then possibly 3, 4, and then 5, and we are trying to finish that 5 off. Okay, so it's possible that we would probably mark sideways without actually making a big retracement. So what that would mean is, in fact, if you look at it on a 4-hour chart here, see what that would mean is that we've already had probably small 1, small 2, small 3 congesting into 4, and probably another push higher. Okay, that is what I think might happen. Now today, later on, there is an economic news related to the yen pairs from the Central Bank of Japan regarding its inflation and other things. So it may be that we might get some choppy action sideways to upside, but I think this week most likely we would probably tag a slightly higher high, and I would not be surprised if we, for example, even tag 95, okay, on the US dollar yen. But at the moment we've already had a higher at 94.43. So but we are very, very late in this up, current uptrend. But once this wave, this 1, 2, 3, 4, and 5. So once this wave 3 is finished, now this wave 3 um, could be already done, and we in fact wave 4 is probably also complete, and we are maybe trying to make a wave 5 in parentheses, which is like so. So if that happens, then in a larger degree it would complete wave 1 and 2, then this is a 3, and that would finish off around 95. Okay, but as far as it remained within this uptrend channel, the bias is still to the upside, and we would not expect any serious retracement. So really speaking, you need to break below this rising lower trend channel line in order for significant retracement to be expected, where we would get this wave 4 retracement. So wave 1, wave 2, all of this part of wave 3, once it's finished, will come back for wave 4, and then subsequently we will go back up to complete wave 5. Okay, before we get a very noticeable retracement to the downside like that, right? So in the meantime, bias still remain to the upside, but it is very, very late. So if any of you are actually still long on US dollar yen, you should be really putting your stops, bringing your stops in to make sure now you're not too far away. But the pair is quite volatile. For example, within a day, it does a couple of hundred pips quite often, you see. So from that perspective, I think maybe perhaps if you had a stop just below here around about 90, 92, or just below 90, 92, you should be still okay. But really speaking, anything above 94, you should really start taking a profit off, and also see this rising upper parallel of the pitchfork will probably finish up maybe tagging that also. We have some Fibonacci confluence also coming in the area of about 95, so that could be the potential upside for US dollar yen. Until then, really there is very little anybody could say. And then if you put the RSI, then on the daily chart on RSI, see, we have this blue trend line and we have this brown trend line. So my feeling is that we may go back up from here like so. So at the moment we might be trying to mark sideways and then make another thrust up higher price to 95 area, and we'd get a divergence forming here, and then once that divergence is confirmed, price will fall back to create this wave 4. We might find RSI coming back to this rising trend line, and then eventually we will see this one go back up for wave 5 when the entire sequence will be finished, and we'll come back down with the RSI. But on the price, we may then have a retracement of the entire leg up, whatever that happens to be, because this 5 may well be much further up. It could be around 98, could be around 100. So in reality, if you want to trade this to the long side, it is not possible to go long until we get this significant retracement to the downside, probably in the area of about 90. Okay, and shorting is going to be very difficult. So I would avoid the shorting, because you never know, this thing can really continue to run, but within the confine that it is very, very late in the cycle. And in fact, anybody entering long now will most likely probably be a loser. But anybody who's already in it, they have to watch that they don't give much of the profit back. So that's the area we are in. But if you try and short now thinking, oh, this is coming down, and it carries up, then you'll be taking unnecessary risk in that particular case. So the best thing is for it to wait until we get a retracement to go long in any of the yen pairs. So if you look at Euro Yen, for example, it is pretty much the same picture. That too on RSI showing exactly the same kind of pattern, and in terms of the wave count, it's also the same. We've got small 1, small 2, wave 1 in parentheses, wave 2 in parentheses, and probably currently still within the wave 3 in parentheses. So again, we need that this rising trend channel to break to expect a substantial retracement before going long. And really the same picture applies on all of them really. CAD yen exactly the same. If you look at Aussie yen, that too exactly the same. We're still looking for another minor high, still within that trend channel line here, as you can see. Even if you were to steepen it up, still within that uptrend channel. So really most of these are getting to the stage where we've been developing divergence for quite some time, even on a daily chart. So once they fall, I think we will probably have a fairly sharp sell-off. My feeling is that the yen related news from the Ministry of Finance of Japan might be an instigator in possibly getting like a spike high and then coming down. So most of the yens are in a very late stage, and we can approach them with great degree of caution, but in reality looking for retracement to an area that we can identify, which will be a retracement quite different from what we've had here. We want a retracement that will last for several days and would come down. For example, if you count on a daily chart, say for example if this one has gone up so far almost like 116 days, then 116 days is like nearly 3 months. So we'd expect at least about 4 or 5 weeks of correction, and like 4 weeks, 4 weeks would be like a third. If you get 3 weeks, that would be like 25% approximately. So I'd expect at least something in the region of 3 to 4 weeks correction, and that's time we could attend, start looking for potential entry to the long side. Otherwise it will be really no go. And when it comes down, the reason why it would take 3-4 weeks is because it won't come straight down. See, this one will develop in the way that it will come down. And let me just change the color of that one to say green. So it will come down like that, and then it would do a retracement, you see, and then it would make a second leg lower. That's the simplest what we're expecting. And so hence you would expect some time, week and a half for this leg, another week or so retracement back, another week and a half coming back for this one. So quite easily 3 to 4 weeks is a reasonable time expectation, I think. So we'll look out for that. But other than that, unfortunately, I think yen pairs are just far too risky now to enter any long, and far too risky to consider any short immediately. However, once we get this position, like on US dollar yen, maybe hitting 95 and then beginning to correct, we might get an opportunity to possibly to short, but only after the first leg is down. Then we get a partial retracement back up, then we have a position or structure over which to put a stop in and then consider shorting. But in reality, I wouldn't really bother, because even if it comes down 400-500 pips, it will be very difficult, because you'll have 200-300 pips already going in here, another 100-150 going back in the other one, and then coming down for another 200-300 pips. So within that, you'll be fortunate maybe to catch it for a good few days and maybe get a couple of 100 pips. But for my way of thinking, I think it is better to wait for a retracement and then enter a long trade. And so that goes for all the yen pairs. So I hope you won't mind me curtailing this yen currency pair coverage, because there is not a really great deal to add. It's the same picture in every one of the yen pairs. So we'll go into the other charts which are perhaps a little bit more going to be helpful to us. And one of them, we're going to go over the pound. There was a big news today regarding the Bank of England Bank of England chairman or the head of Bank of England made a comment about inflation rate likely to continue, and that the monetary easing or they will continue to look for monetary easing, and so obviously that caused a lot of panic in the pound, and so pound really got sold off today. But could we completely rule out the pound? Now, I think whilst the argument I've been presenting, I may well be completely wrong, and I'll be the first one to hold my hand up to say that I'm wrong. I would equally not be too willing to change my view just because we've had a couple of days of strong selling on a pound, and I'll explain that in a second. Also, one of the members sent in an email to ask me a question saying that when I outlined my case for a potential bottom in pound around about 56 area, so we're not completely far away, we're at 56, 55 somewhere. So, when you're looking for a major bottom, it's sometimes impossible to identify an absolute level, but it's a general, area, region where we think there will be a potential bottom. So the question he raised last week was that regardless of the selling that, what I thought was, from Commitment of Traders report in the session that I covered last week, he suggested that there was some insider selling, and so many people were selling, knowing full well what is going to happen. And so he again posed the question to me today, that did all those people had insider knowledge? Well, it's possible, because in the world of humans, you never know how communications can sometimes be leaked in some way. I'm not saying that Mervyn King leaked the information, far from it, but there are a lot of personnel working in Bank of England in different departments, and if there was some information that someone were privy to, and if that was leaked, I couldn't really tell you. In fact, it would be not really even practical for me to start going along that particular path. I know there are a lot of things happen in the human world in the way of communication, and people sometimes could perhaps pass on unintentionally or inadvertently say something, so really I would be speculating, to be really frank and honest, to say that the market had insider knowledge. But what I could say is that there are a lot of large institutions where there are many very experienced, very knowledgeable, and quite really very clever people, and they'll be doing all sorts of analysis and calculations and everything backward and forward, which I'm really not capable of doing, and I really do not even have resources to carry it out, even if I wanted to. I don't think most of the small traders like myself and like some of you would ever really compete with that. So from that perspective, I think it is really futile even to consider whether insider knowledge was the reason why a lot of selling has taken place. But we can actually do something. And the other point is that if there were some of these clever people who knew what was going to happen, or they were able to do a lot of calculation, then forecast, economic forecast, and gathered that this is what Mervyn King is likely to say, because really there isn't anything else on the horizon, and maybe they then took the advantage of selling the pound. So that's quite possible, but we can't really compete with any of them. So we've got to do what we are, I think, able to do, and then use whatever ability we have to try and interpret what's happened and plan our trade. So when we are looking for major bottom, people often say, one can never catch the bottom, and that's true. And equally, one shouldn't keep attempting to catch a bottom, because that's also going to be very damaging. So far I'm hoping that none of you really entered any long trades yet, because we needed qualifications. So for example, if we were looking at a pound New Zealand trade, remember what we said is that this we had this high here, we had this trend line going, so we were around about this level, and my question was, do we already have the bottom in place? Now I thought that maybe we do have a bottom in place, because we had this wave 1, wave 2, wave 3, wave 4, and that was the final piece of the jigsaw, and in which case did we have a first leg up, and it appears that we had a 1, 2, 3, 4 and 5, so maybe we did have a first leg up. So I was then saying we want to look for potential long entry, maybe like 50% retracement. So if everything lined up, we could have had a long entry around 187 approximately, or 61.8% retracement, so that would have been like 186. However, you couldn't enter long blindly, you couldn't just enter because we need confirmation, right? So this appeared to be everything correct. So if everything was correct, we should have had a low, and we should have had a confirmation that we've now got a low and we're starting to move out. So this larger trend line, that would have been an ultimate confirmation. But see, on a shorter term, even on 4 hour, we could have had this trend line down, and the trend line never actually broke, right? So I mean, today's, you see yesterday's chart, this is you see yesterday price, when we were looking at it, we were around here somewhere, and what we were expecting is if this was the first leg up in the new direction, then what we were expecting here is we should have had an A, we should have had a B, and we should have had a C, right? So we should have had ABC zigzag, and that should have been around 50% or 61.8%. So if you put a Fibonacci on there, this is what we should have had, right? So we really were looking for long entry in this area, okay? So but it never happened because we never got this leg down. We never had ABC retracement back up here and then a second leg down, and confirm on a RSI that we've got a divergence on a 4 hour chart. You see on a 4 hour chart, if you can see, we've just had a fairly clean straight down line, okay? So from that perspective, the trade never materialized, so we shouldn't have entered long. Now the second question is, this brown line you see, that was the last major low, okay? That was the last major low. Now if that was the last major low, then today we have clearly closed well below that, and we've in fact had on a 4 hour one hit, second hit, and a third hit. On a third attempt it's broken below, so today we will have a close below that. Now what could happen is we could have a market could correct back to the upside to underneath of that previous significant low that we had some while back, and we've broken below today, and the market could then begin to just continue down, in which case pound is in serious trouble. We have to then accept that. Then my analysis that I'm expecting is wrong, okay? The pound will be very, very weak, in fact, against everything. Probably the weakest currency next to yen. I really don't think that somehow, but that is likely, okay? Now the other thing that could happen is that we could find the market would actually bottom and do a very strong rally from here. So by the time we actually close end of the week, we would not have a close below the previous low. Market would rally back up and actually close above that previous support, which is this brown colored line, okay? So that could be a possibility. My next question is that whilst we don't have insider knowledge nor the ability of some of these institutions, I say this: we could try and read into what is happening here, right? Now if you look at, and in fact let me share with you the other chart for that. If you look at this is the pound futures contract chart, okay? Unlike the FX chart that we were looking at, this is pound future contract chart, and it's a daily chart, right? Now the point I would point to you is this: see this red bar here underneath that, this is all volume, okay? So for example, you get big over here, from this area, this bar here was the highest. Let me mark that. So this bar here was in fact the highest volume bar. Okay, so the prices were coming from here, dropping all the way, and see when they had this one, over here, that was the highest volume bar, and then it sort of carried on and dropped some more, pulled back and dropped even some more. But the look at the volume really eased off. And then what happened, that even though it made a lower low, it was actually toward the end of the down move. So the point I'm making is that if the market was dropping all the way here, you'd expect heavy volume at the top. You would not expect such a big spike in a volume toward the bottom end after the price have been going down for so long. When the price has been going down for so long and you get a big volume like this, that generally is a sign of a panic selling. It doesn't mean the market will turn back straight away the next day, but it means it's a panic selling. And then that panic selling was confirmed by the fact that subsequently we dropped even more. I mean, there's a noticeable difference from, say, here at 157 to a price dropping all the way to 153. That's 400 pip, but the volume eased off. And then we had another spike low and the volume was even less. Okay, now that seemed to be happening most of the time. See this bar here, that's in the period of this decline, this bar is the highest red volume bar here, and that was the low. And you can keep doing this all the time. Look, this bar here, the market fell all the way, and that was the highest volume bar in that period. And here, this is the massive, this is the ginormous. I mean, all this volume bar, this one is significantly high volume. So today's selling was a massive selling, and my feeling is that that is a panic sell, I think, because of what Mervyn King said. But where is that in relation to the price? See, price been dropping all along here. Price has been dropping since the middle of December. Price has been dropping. So we have now dropped for nearly 2 months, right? And then we get this big massive volume bar. So the thing is now is we need confirmation. What we will have on a confirmation is the following. Let me go back to our original chart. So if we go into the pound chart, actually what I'll do is I'll bring a new pound chart up. Okay, so looking at this new pound chart with no other analysis on, but other than that, what you need to remember is that there are two possibilities which the market is currently trying to. They're saying this one, basically just a trend line up, and they're saying this one is a symmetrical triangle and is breaking to the downside. So far they've got the edge. Over here it looks like we've broken below, right? So if that's correct, then we will be really coming down quite heavy. Okay, the next thing to remember is that if they are wrong and this is only a trend line, nothing more than that, and there are a few different ways you can draw trend line, but this particular one also horizontally, see this area we have had a lot of support previously. See, every time it came there it was supported. So maybe we might even come all the way to 150, 270, 153 area. That is quite possible, but I think that would probably be the end of the fall. Okay, however, what I'm counting on is this. You see, this leg up, okay, this leg up, as you know, we were saying is A, B and C to give us capital A, okay, capital A. Then we had a, small b and small c, so that gave us wave A in parenthesis, and this is my reason for remaining optimistic. Okay, so here was A, small b, and in the same way we had small a, small b, and then small c here, so that gave us a wave B in bracket. Okay, now we are working on making this one wave C in bracket. Once we have that, we'll finish this wave A, and this will finish wave B. Okay, wave B. And in terms of the Fibonacci, we've got a very deep retracement, granted, I agree with that. So we have so far 0.786, okay, so that comes in there. And in fact, let me just see if okay, so there is the 78%. So, and see horizontally here we had an area where there was a lot of support. I know we sort of oscillated a little bit. Generally in that area we had a lot of support. Okay, so that reads at 155. Okay, that's where it's reading, 155. So we've got a bit more to go. Now if I now do the reverse fib projection like that and change the color of that one to say blue, okay, see the 100 and what is the reading, 161%. 161% now comes in there, right? So I've got two fib confluences coming in that area, and what the Elliott wave says is that after this wave up, which would appear to be relatively impulsive up to here, wave A, then we've got wave A in bracket, B in bracket, and C. So this is classified as a potential expanding flat because wave B went beyond the origin of wave A, and then wave C went beyond the origin of wave B. So wave B started here, so we didn't come back here, but we went beyond that, and wave A started here, but the wave B went beyond that, so it's expanded flat. And what they're saying expanded flat or any kind of a flat is that if you get ABC in wave A, ABC in wave B, then what we're expecting is effectively 5 wave to the downside. In that 5 wave to the downside, the way I am looking at this one is this wave here, this one is wave 1, and it's not really very difficult, very complicated, but if you just look at this part here, you'll see that that is the first swing down, wave 1. So that's what I'm going to label it, wave 1. Then this retracement is a wave 2. Then this one you can see is wave 3 here. Where shall I say? I'll say wave 3 here. Okay, so we've got wave 1 down, wave 2 retracement, wave 3 finished here. Okay, then all of this must now be part of wave 4. And I'll go down to a smaller time frame now to make sure that we understand what we're talking about. Okay, so I'll go down to 4-hour chart, right? So looking at this, it's got wave 1 there, so we go A, B and C here to give us wave 2, and then we had all of this here up to there as a wave 3. Okay, so I'm going to take this one off because now we are we are there. So wave 3 here, that's wave 3. Now what's happened here is very, very strange, because originally me and everybody else would have been able to put a trend line down here like so. See over here, but we retrace beyond that, so we could then go back and say, okay, maybe it's like this. Okay, so again over here we went beyond that. So I was beginning to think, have we gone and broken above? But then yesterday, remember, we dropped below here. We dropped below here very sharply, and we finished with a pin bar on a daily bar. So today we've taken the pin bar down, right? But in terms of wave count, what we've got here is like a running flat. A running flat, as you know, is instead of wave A, wave B and wave C retracing to the upside, what we get is we get wave A, we get wave B, and we get wave C, but it appears as though it's slanting in a direction. So if I now try and finalize that now, so I think what we got is very strange looking count, and this sort of thing is really not possible for anybody, no matter what kind of a skill or ability they might have in labeling these or analyzing the market, even using technicals. But what I think we've got is, see, the small a, small b and small c. So I think this is going to be a possible wave A. So minute a, minute b and minute c to give us wave A. Then we got minute a, minute b and minute c, so that gave us a wave B. Wave B, and then again A, B and C back up to give us wave C, right? So that's why I've got this green line going. So this is wave 3. So in that case, this one is a wave 4. So I still don't know whether this is absolutely correct, because we need future price action to confirm what we think we've understood. Okay, but so far you can see on the RSI that we are making lower, lower and lower high. See from here, with exception of this wave 2, so wave 1 started here, right? So here we said is wave 3, and then we've got A, B and C, and A, B and C, so that gave us wave 4. Okay, and now we are making a wave 5. Now it is possible that if we didn't have today's price action, then this might have been the end of it. That the pin bar we saw yesterday would have been the end of it. You see, so looking at an hourly chart, so yesterday we dropped down here and we almost closed back over here. So that was yesterday was a pin bar. So on that pin bar we almost had this sort of price action, almost like this. Okay, we had that kind of price action. So we said it was a pin bar. So on that basis, one could have assumed that yesterday the bottom was in, but of course today's event even made a more panic selling to the downside. Okay, so now what have we got? If this is wave 4, then how do we explain all of this? Well, my understanding is that, and I'm taking time to explain this, because really this is the trade that I think if it's going to line up, it's going to be very profitable, and we do need to try and understand. And this will also give us an idea that, you know, picking any major turning points often are not that easy, but there is a system and there is a method, and we just need to be patient. We need to work with it. So here I think if I draw this line down, I'll make that one a thick brown color. Now at the moment I'm just drawing this, right? So I've got no guarantee it will work, but I'm just drawing because this is the only thing I can do as a technical chartist or analyst. This is all I can do. I am now in a wave 5. So if for example we had a normal wave 5, that would have been 1 2 3 4 and 5, that would have been finished. And if that was the case, we would have been now looking for a strong impulse to the upside. Now that never happened. So because it never happened, we got small a, small b and small c. That's what we had instead. So instead of a new impulse, we had wave A, wave B and wave C. Right, so what that gave me somehow is ABC zigzag. So we had an impulse wave down of 5 waves and we had 3 wave back, A, B and C back. So what have we got? So maybe what we got is a wave 5 will have 5 waves. So I'm going to label this one wave 1 in Roman numeral. Okay, so wave 1 in Roman numeral. So then this one ABC back up must be wave 2 in Roman numeral. And then this next drop, which is 1 on this 1 hour chart, 1 2 3 4 and 5. Okay, so this spike here is probably wave 3. Now you'll soon see where I'm getting with this one, right? And analyzing live charts as they're developing, this is exactly what happens. Is the while the price is going on, you begin to look at this and say, okay, what is it giving me now? Of course, looking at it on a smaller time frame, you probably wouldn't even catch your breath before the bars change, so it's difficult. But now we are looking at it, we can take a bit leisurely and try and plan it out. So I think this very big drop down is a 1, retracement wave 2, then this today's selling is a wave 3, and then I think we've got this here as wave 4, and therefore now all that remains, if we just want to see a very small wave 5. Now Elliott wave says also that wave 5, this last wave 5 cannot be longer than this wave here, because this is longer, so this is wave 3, so wave 3 cannot be the shortest, and therefore this next leg cannot be longer than that. So what that tells me is if my analysis is correct, then this next wave down cannot be, otherwise I've got completely wrong. Maybe I've got a wrong end of the stick, but here is a wave 5. So in other words, starting from there, we cannot afford to go there, otherwise my wave is completely wrong. So if it falls below 150 154, then I think we've got to come back and realize that we are completely wrong, and I mean and absolutely wrong in our wave count. The market and overall expectation of potential bottom, that might still happen, but the wave count is wrong somehow, so they need to be modified to fit the market. But at the moment, what I'm expecting is what I've just showed you here, is that we are probably working on a wave 5. I think this scenario is not going to happen. Okay, so what I'm looking for is more like, it's very difficult because of the sharp drop, but let me see if I can try and show you what I mean. What I'm looking for in essence is more like this, if you can just imagine. Okay, maybe here, or maybe we might get, what we might have is we might have a small bounce back up from the current area. Maybe then our overall thing might change a little bit, like there. So then we've got this here as a wave 3, then we got small a, small b and small c. So maybe wave 4 will turn up here, and then we get one more decline to the downside. So let me make that one red color. And we are looking at now 30-minute chart, by the way. So basically that's what I'm looking for. So I think what we're now going to be looking for is that we have like a falling wedge but it's going to be so skewed toward the back end, right? Because this first one, so massive wave down. Okay, so I think what we got is 1, 2, 3 complete. Currently maybe retracing into wave 4, and in which case it may be that this one here is possibly small a, this one here is a small b, and then maybe this one is going to be small c, and therefore it gives me this wave 4, and then we'll get another leg down. So probably by the time we actually reach these fib confluences we saw, which is the 78% retracement of the move up from June to September high, and then projecting that other leg we had confluence coming in around 155 area. So I think 155 area now is a critical area where we expect the bottom to form. And again, we won't just jump in, we'll need some confirmation. So what sort of confirmation are we looking for? Okay, well, if you look at this time frame here, we'll go into the hourly chart here. Maybe MACD, probably not. We'll look at MACD in a 5-hour chart, daily chart. MACD is not very helpful, so MACD is okay. It's helpful here. If you look at this MACD here, you see we have a potential divergence on the MACD, and there is definitely divergence on the histogram, you see. Okay, so in a histogram you can see that we had a low in a histogram when we made this low, which is the wave 3 low, and that's wave 1, 2, 3, 4. So wave 3 is the lowest low. So you can see low in RSI here, low in the MACD histogram, low in the actual MACD. And so MACD is doing is that any more price action to the upside is going to get MACD to curl up. This area here is going to hook up. This is on a daily chart. So this here is going to hook up, and if it hooks up, then we'll get divergence forming. So MACD is supporting, RSI definitely supporting. On a daily chart here we do have a potential divergence, because look at the difference between this low and the current low. We are talking about nearly 170 pip difference, and look at the RSI, and the difference between the two is after 13 days. So from this low to this low is 13 days. So that's a good separation period to form this higher low. So I am still fairly convinced that we will have a bottom in this vicinity, and our trade that we are trying to stoke will still develop. And the fact that on the other chart we were looking at, this one here, is that this massive volume selling today, I think, is a panic selling. So what will happen now next couple of days is basically a price action to do what I was just describing here, which is more likely to be this falling wedge pattern. So I think we're going to get like an inside bar and doji bars, and that kind of actions over the next couple of days, I think. And in that process we will still make a new low from where today's price are. From today's low we are still going to make a new low, so we mustn't forget that. But once we form that new low, we'll see a divergence forming on 2 or 3 different time frame. We will also be able to put some trend lines on that could break, to give us an indication now that it's breaking to the upside, and we will need a confirmation. So if you are really serious about getting long, we need to wait, and we may even have to find that we will probably need to wait until such time that we might get one strong move up. So when you get a one strong move up, which will have 5-way move up, we might get a move up like that. And okay, we haven't got an absolute bottom, we missed the first 200-300 pip possibly, and then this will do a retracement in this manner. It's going to do a retracement like so. After 5 wave up, it's going to do the A, B and C. That's when we put our fibs on like so, and look to find a common area, where we normally expect a retracement to come after ABC decline, and then we look for confirmation of a possible low being formed in that area to go. So in other words, even if this first leg up is 200-300 pip, it will probably come back for 100-150, at least 150 pip or 200 pip back down, and that's where we will get long, and we will then have a stop below the low. So then it may be like 100 pip stop loss, and that's when we will look to get long. Okay, so don't jump in prematurely. From where we stand now, we haven't got the low, and we're still expecting another low, and that another low what will happen now is it will test the low, and it will make a new lower low, and we'll find the volume just drop off. Okay, the only people who will now be getting out are people who are taking profit on this short already. They'll be getting out, so they'll be buying back each time it drops. They'll be buying back, and there will be many who will be thinking that, you know, they've held on so far, they can't hold it anymore. This is now going to go no, it's going to go against them very badly wrong. It's already gone badly wrong with them. If they were long, they'll be looking to get out. So the selling pressure should drop. The highest selling pressure this is the massive selling pressure we've had today. So I think what we're going to find is a narrow range bars and doji bars, but still making lower lows. And today is a Wednesday, so tomorrow is Thursday, Friday. So I suspect we might finish up Friday on the low. Friday on the low with a drop volume. So maybe the trade we are looking for will probably materialize next week. Okay. Those trades will materialize next week. So the pound will probably still make another lower low, but I'm expecting at several degree RSI divergence from daily, MACD divergence from daily still in play, even if the prices fall to about 55 or even little bit below that. Okay. So in that particular context, we are expecting that particular falling wedge pattern to form, and if that falling wedge pattern to form will actually develop, then what are we looking for in the pound New Zealand? Well, pound New Zealand has actually made a new low, but we are actually looking for a bottom in that one as well. You see, at the moment pound New Zealand going straight down, but if you look at daily, on a daily we do have still a potential for divergence here. Look, on a daily we have a potential for divergence, so that one is still likely to form a bottom. And what we might have here is a price coming down, but as I suggested to you, that maybe by end of the week we might climb back up again. So we'll finish up with a weak bar. We'll finish up with something like well, let's look at this one, week. Okay, this massive red bar, we will, I don't know what we will look for. Massive big bar, what we might finish up is a bar looking like that, and possibly, you know, a tail at the bottom. And then next week we might start looking up, and on a shorter term we might actually start looking for a new uptrend. Okay, so this is going to be very, very badly, you know, panic looking and very scary looking weekly bar, but I think it is not going to be end of the story, because pound should bottom. There is every reason to expect pound to bottom. Okay, if you look at this 4-hour chart, then even on a 4-hour chart we still have a potential for divergence forming on a daily. On a 4-hour chart we have a potential for making divergence from this low, although here we've broken, but you can see back from this low here and compare with that one, we still have a potential for making divergence. So I still think we should be looking for a bottom to form. It's a question of just exactly where. So from that perspective, there was one thing I was going to show you on this pound. The other thing is, when you have a move like that, and we said this is wave 1, where you have long wave 3, Elliott wave says that often, and again it doesn't have to, but often you'll find wave 1 equals to the wave 4. So if I put that at the top of the wave 4, you can see where that brings me. It brings me into area where we are expecting. You see that? This one here is, if I just place it there like that, is bringing into area about 54.78 area. So another reason why we should be expecting a bottom to form in that particular zone. So if a pound forms a bottom, then the pound New Zealand should also have a bottom in that area. And then we are looking for pound Aussie. Well, the pound Aussie hasn't quite gone through its all-time, not all-time, but the significant low we had here. Over here, for example. And we are still in a rising uptrend. And we haven't come into contact with that. And it may be that we might actually come and touch that before going up. But that again, on a daily, you can see we have a strong divergence forming. Here, strong divergence forming on the daily, and if the price makes a new low, we still have this rising trend line and 88% retracement, but maybe we might not even come that far. But I think it's possible that we, even if we did drop that far, we'll be looking for a long entry at a lower level. And again, we've had this ABC to form A, ABC back up to form wave B. So really, this one here should have been a wave A. Okay. So wave A in double parentheses, wave B in double parentheses, and because this was a zigzag, we got wave C in double parentheses, and that got A, B, and C, and currently trying to finish off that wave C. So all of those things tells me that we should still be looking for a bottom in that area for pound Aussie, and likewise in the pound CAD. See, if this was the wave 1 up, we got A, B, and C, and this chart looks very, very much like a pound dollar chart, and we are still coming into the zone for possible low to form. And again, daily we have a divergence. 4 hour, we still have a divergence in 4 hour. So I wouldn't completely write off the pound, not yet. And it's so easy to get put off by seemingly things not working out. But the thing would be is not to enter in too prematurely. But one of the thing that I was showing, and I won't take too long on this one, I just want to point out, and that's all really. Yesterday, I was saying on here is that this is the pound trade. So I'm expecting low to form in the pound. So I can try and catch the bottom, but I can do it with the option, but I can't do that one easily with the normal FX currency. Okay. So what I've done here, currently that particular mid-market price is 41 cents. So I'm bidding 30 cents to buy a call option. Okay, what that means, if the pound drops even further tomorrow or Friday, maybe this option premium price will fall from where it is now, probably come into 30, and it will actually fill me there. So I've got a limit buy call for June with a strike price of 164. So even if the price is 155, by June I think the price will be well up, and this particular premium is going to play into what I'm looking for, and in terms of exactly where it is. So let me just show you. Okay, so what this would mean is I will be buying about 1,000 shares, which is 10 contract of 100 shares. But in total, I'll only be putting $300. This is a demo paper trading account, by the way. Probably say here somewhere, paper trading account. Here, look, paper trading account. So paper trading account, so I'll be risking $300, right? And I'll put a limit sell entry there, so it's not filled today, but maybe if tomorrow Friday the prices fall further, I might get a fill. If I don't get a fill, then I'll try and buy it at the market, because next week I think it will start bouncing. So here now, if the price go to 160 160, say 161, 162, or even if it comes to 164, what I am buying, that is only I'm spending 30 cents, will be worth close to $3. So that will be 10 times. So I would not mind, for example, with doing practically very little, if $300 turn into something like $2,000, $2,500, or $3,000. Because if, for example, the pound doesn't stop and it becomes like a runaway freight train, and say pound collapses and goes to parity, okay, then all I will be risking is $300. If this was my live account and I risk $300, then that would be something like 1% of my total account. Okay, if this is too big, then you simply drop, you don't buy 10, you only buy 5, in which case you risk $150. Or even if that was too big, then you simply risk $100, and maybe all you buy is something like a three contract. So 3 contract would be like a 300 shares. So 300 shares at 30 cents, you'll be spending like $90. So $90, and maybe some dealing cost in terms of paying the fee for the broker. So you might finish up like $100, $120, right? But if it works out, that could turn into something like $300, $400. And then you can imagine you'll have, few different ones going on and not everything piled into one. But, if, for example, if we find that on the other chart here, if you just look at it on a daily chart, and say, for example, that we head back to somewhere over here by June. Say by June, say this one is taken now nearly a month for it to drop. So say in 2 months, we almost climb back up there, right? Like 64. Then what I was just showing you now is wrong chart. If this one gets to 164, then as I say, it will be worth about $3 each. So it just gives you an idea, and then it might be that I will have too much profit locked into that one, so I wouldn't want to give much away. So what I could do, if it goes to 165, for example, 166, it will be worth about $4. So that's be like 12, 13 times the value. Okay, so this is where I think really some of you, if you really want to try and grasp this, then maybe open up a demo account, try and do what I'm doing and try and experiment with it over the next few months and try and get hang of it, and then you'll have some opportunity of trading live using the same principle. We will not run out of opportunity. There'll be plenty of opportunity in all different kind of instruments applying the same logic. Because the FX currency, I find that none of us have really big enough account to take a sizable position, and then if we get something like today, it stops you out, and then the thing will go in your favor. Whereas in this one, you haven't got to worry, because even if you get, if you get into the trade now, and for another whole week or two, it goes against you, and so we fall all the way to somewhere around 152 or 153, then that $300 will probably disappear, but you've got a contract till June. So if by June it comes back to 156 or 158, you'll get your money back. You'll probably get more than your money back, right? So that's the concept. Anyway, so having covered that, I'm not sure if there's anything else you want me to go over. I'll just very quickly cover the euro pair. Not all of them, just a couple of them. Just so that you are aware. Euro pound. Now you see, this is what I mean. Look, I had a trend channel here, so I was expecting another leg down. This is what I marked out yesterday. Okay, this is what I marked out yesterday, and I was expecting ABC. So this one didn't quite fit the ABC, but maybe you can say, okay, this was A, this was B, this was C. So we were looking to short. If you were looking for doing that kind of shorting, I suggested not. I suggested let it come down to the bottom and we could look for going long. Okay, and alternate was that this was A I was going to get B and it was going to come down here, but it didn't come down here. It instead went up. So what have we got now? So I think what we got is a flat. So flat means that this alternative is no longer alternative, because what we got is A, B and C. Okay, so we've got wave A, we got A, B and C back up. So this is B, right? Now if the Elliott waves are correct, then what are they suggesting? Elliott wave says that if there is going to be an A and B, so A here, which is a zigzag, B up there is a zigzag also, right? It's not an impulsive and it's not a 5 wave up. There is no way you can say that this one is an impulsive and a 5 wave up, because how will you count it? If you say this is -1, -2, -3, -4, -5, so okay, so this becomes wave 1, this becomes wave 2, then this can't be wave 3 because it's too small. Okay, and this one, wave 5, is actually bigger than wave 3, so that it doesn't fit. So what does it fit? It probably fits like we got wave A, wave B and wave C, so that gives you larger degree wave A retracement and that, or you got wave A, wave B, and then you got ABC up here. So in general we've got ABC. So if you got ABC, ABC down here, ABC back up, then we're looking for 5 wave to the downside. So whenever the top is formed in this area, we'll be looking for 5 wave down. So can you imagine, where the euro's been very strong with the pound, what would cause this 5 wave to the downside? The only thing that I could think of which would cause that is that the euro might appear to be a bit weak, and during that time pound will actually seriously start bouncing. That's the only thing might cause that 5 wave move to the downside. So we'll finish up with a flat correction. So broadly speaking, it will be like flat. Instead of A, B and C coming down like that, it will be flat. And then still around here, the euro will then revert back to its normal behavior. So around 84.50 or so, or maybe even a little bit lower down, we could be like 84. We could be looking to get long if you wanted to trade euro pound. Okay, and then the other currency was the euro Aussie. Now the euro Aussie is a triangle, so potentially I am expecting, and yesterday when we were covering these, we were saying potentially you can go long on here. Okay, so now we seem to have come into moving average, 200 period moving average on a 4-hour chart is now supporting the price. We've also got this minor trend line, which we said is probably part of a triangle. Okay, and we've got everything lining up in terms of the price. So now what we need to do is maybe say, okay, if that's the case, then we are expecting triangle resolve to the upside, so we could consider going long. And if we consider going long, then the stop can be below this previous low. So in that particular case, if we get stopped out, we get stopped out, or even below this one here. So currently from the current price, you'll be about 100 people so further away. But if you look at this in a smaller time scale and see what's happening, so we've got this wave D, A, B and C to form this wave E here. Okay, so whether it's actually formed or whether it's going to come down a little bit, we don't know. But if this one is A, B and C, okay, so it's coming down. And if you look at what the indicators are saying in terms of 30-minute chart, so you see on a 30-minute chart we've got a divergence on the RSI. Okay, if you want 15 minutes, then again on a 15-minute we got a divergence. So what you might do is you might say, okay, I want to try and get close to the price. So this is what you could do. You could, for example, this short period here, you could probably put a trend line on that one. So if the trend line breaks to the upside, then that's your first warning that the price is now rising. Okay, maybe what we might get here also is like a falling wedge pattern, like so. Okay, so if I change the color of that to brown, and this is the final pair I'll be looking at. What am I trying to do? I'm trying to change the color. Okay, so here is we've got A, B, C, D, E. So within this, I think what we might get is possibly like that, if it's not done already, and then maybe another leg down. So in reality, you know, if we're fortunate, we should be able to catch that almost at the low. If you don't, so if almost, so you can have probably something like on this particular case, it would be worth to try and catch this absolute low we had today. So if the price goes a little bit lower down, then you might take a little bit of hit. But if it doesn't go lower down and simply come back to that, and remember sometimes some of these pairs have a 5 or 6 pip spread. So again, that's the other possible problem, is that it might come and just miss your order and then go up. So I would put an order in, say, at 129.60. Okay, 129.60, and then your stop. Then your stop 129.60. From there, if you put your stop here, that's about 60 or 70 pip stop, which I think is very acceptable. And on a bigger time frame, we're expecting that to support. This is the triangle, it's A, B, C, D, E triangle. Also, to be absolutely sure, this is another thing you can do. Put a fib ratio on. So if you look at this previous one, I think you'll find it probably did something like 88%. You see, look, 88%, just over 88%. So on this one, I'm expecting something similar. So if you put this one on and that fib on, see, we have already done 61%, that can take off. We've already done 78%, so that comes off. So the only one left is 88%. So we're coming into very close proximity of that. 88% would be at 29.56. So what did we say? We put a limit order. Limit order we said just above that. Okay, so limit order we said at 29.60, and the Fibonacci is saying 29.56, right? But because we've got everything lining up, that would be one way. Or the other way would be is simply wait for this one to start making higher high and higher low on maybe say 15-minute chart. After breaking this trend line, it start doing higher high and higher low, then you be confirmed, right? And a completely different way of doing it is on a 15-minute chart. You might say, okay, currently this is the highest pivot, so you put a order just above that on a stop buy order at 130, for example. And then if this one comes up and start going down and it forms a low, then you change the order to that just above that pivot high, to 129.85 or 129.90. Okay, and if it keeps doing that on that 15 minutes, you keep bringing it down. Then idea would be is that you will be, you know, very moment it begins to turn back up, it will take you out, because then it is starting to take out the pivot. At the moment it's making lower low and lower high. So once the moment you start taking out that last pivot, then it will be taking you into the price, and you will put stop just below wherever that last low is. That could be the other way of doing it. Okay, so these are a couple of different ways. I'm sure some of you are aware of this, so I do apologize if I'm going over some very elementary, but just sometimes, you know, price will start running off and we'll begin to wonder, you know, why we missed it. So this would be a couple of different ways of doing it. And remember, when you're doing this, you don't load up immediately. We will have good bit of chance to add up positions. So start off in such a way that you're risking 0.5% or 1%, no more initially. And then the moment you're able to lock in with some profit, then there's no more risk on that trade. You can add another one on the following pullback. Okay, and then on that sort of basis, build up a position, because the longer term we're expecting that this one is going to be at least breaking the triangle. So if nothing else, you might be looking for doubling the range above the triangle. So, you know, maybe something in the region of 133, 130, 134 is completely possible. So that if it is 133, then we are looking for 300-400 pips. So if you get in fairly earlier on, you'll finish up with about 250-300 pips possible run, maybe more. And remember, you know, this is only this first cycle up, so it will complete 1, 2, 3, 4 and 5. Then it will come back and probably you can take a position off at that end and maybe re-enter the position again at a little bit lower level, maybe back towards 129 level, for a very big one up, because once this is done, it's come back to here, and then the real trade will start. So this initial one we are looking at going on now would be just a starter, just a taster. Okay, so I hope that is hopefully helpful to you. I have no more to cover. I've gone a little bit more than what I should have done. I'll try and keep most of these videos, if I can help it, between around about an hour or so, but no more. But today I've gone a little bit over, but I've tried to explain and try to give you some few things in there, and I'm certainly hoping you'll take me up on this option trade, because I think once you get hold of that, we will be able to do analysis with a great degree of leisure. You wouldn't be agonizing. You'll be looking and stroking ahead. You'll be planning trades 2-3 weeks ahead, and you're looking for certain things to develop, and then you put some alerts on, monitor that, and then once you're in those trades, you don't have to watch those trades, because that pound trade I'm talking about. And similarly, I've got few other things just wildly. I have assessed some, and I've put in few trades in there. So as you see here, I've got shorting the yen. Now shorting the yen is not possible, but this one I'm looking to short the yen, because I think if we get over the next couple of days spike high, currently this particular option I'm looking to buy at 20 cents. So I will only put on $200. Looking at the moment, the markup price is 25 mid price, so most likely that will be filled tomorrow, and then I have no problem, because the risk is only $200. So if, for example, that one comes back to somewhere in the region of 88, or even at 90, my option price will probably $200 will probably turn into something like $600-700, maybe $1,000. Okay, then I've got this gold. I'm looking to short gold. I've never traded gold, and I wouldn't want to trade gold on FX, but I'll do it on option. This one is a bit different. That one is costing $220, so you can keep a small position. So this will actually turn out like $1,000 trade. But if you didn't want to, you can only buy one lot. So if you buy one lot, which is like 100 shares, so you'll finish up $220. And I'm buying a position that will last me till September, because I'm expecting that if it takes time, I don't want to run out. And if the gold then finishes up around about 1480 or 1500, this particular option will probably be worth something like $6 or $7 each, maybe more. Okay, then same way this Canadian dollars, I'm only putting 18 cents. Currently is priced at 29. So if we get another leg high on a Canadian dollar, I'll get filled at $18. I'll be risking only $180, and that could be turning into almost like $600 or $700, maybe $1,000. So and that one's for June 2013. So I've got 4-5 months. Once it 3-4 months rather. So this is the kind of things that we could be doing even on currency, or using other instrument like oil. And several other things. You'll be spoiled for choice, but you'll be picking and choosing, and I think you'll come to like it. But obviously it will involve a bit of work, analyzing, drawing charts, and then monitoring them, and then assessing where to enter, and then adjusting your prices, eventually getting to the point where you get filled. So thank you, and let me know if there's any questions or comments, and I'll be more than happy to address them in the next session. Tomorrow we'll be looking at Canadian dollar pair tomorrow, and probably also then with great eagerness to see what's happened with the pound, and whether pound is looking for potentially giving us some indication that the bottom is in or not. I certainly think it will be. We just need to wait and be patient, and not be completely put off, and forget about what the market does. Forget about the gossips, and forget about people having access to some privileged information, some things. We don't, but we as far as we are concerned, what we got on the chart, that's our privileged information, and what we need to do is play that chart on our ground, on our road, on our strength, not on robots, not on few minute charts, and not on their term. We want to play it on our term, and that's where I think we would hopefully come out with